Okay, welcome to the ERMI Roundtable. Today's the 11th of November, Veterans Day, 2025. My son's birthday, too. Special guest, Tomas Byron. Thomas is, I've known for several years now, three years maybe. And he's a really great teacher, great trader, tons and tons of experience, professional oil trader and all kinds of things, trading fairly large size, and he knows what he's talking about. So you've got a new course coming out called the Condor Nest, and here's Thomas going to tell us about it. So welcome.
Thank you very much, Tom, and thank you very much for the introduction. Most of it is not true. I'm a very modest, I'm a very modest person. But anyway,
But a good trader.
yeah, well, that's yeah, probably until yesterday,
Until
right?
yesterday. Okay.
Yeah. Let me go to the disclaimer. That's as you know, Alpha and Omega and Thomas Byron, that is me, or I am me. We are not broker dealer or investment advisors. The content given by us is strictly for educational purposes only. Options, futures, bond, and currencies involve risk and not suitable for our investors. Past performance is not necessarily indicative of future results. And all the material and the ideas shared here is for personal use only. You can read all the disclaimer in the various websites. Having said that, let's move forward. So before we start, a little explanation of what is this method, I would call it method, what strategies are embedded into this method. Let me tell you a little bit, not about me, but in general. I want you to follow this carefully. You are used, not all of you, but most of you are used to a successful self-made trader telling you, I did this, I was one of you, and then I made it, and I'm going to teach you how I did it, right? Well, it is not me because I don't have other profession. I've always been trading, so I don't have any other skill, put it this way. So, uh, and that is not necessarily good, but put it this way, the with the exponential explosion of popularity of options or trading, lowering of commissions. At the same time, with the explosions of social media, it's getting cheaper and cheaper to get your material out and blah blah blah. So trading has become very popular. So and definitely there are good traders that want to teach you how to learn, and they all start saying, oh, you're going to be like me, I was like you. I was never like you because that was my career for the last 35 and plus years, right? So and there are some fundamental differences, not about me specifically, but how a professional view trades, and you know how the retail measure performance, right? So and also when you enter this for interest, or for some of you are definitely among the people that students or college students or the members. I have some professional hedge manager, fund managers, or some other people involved in the financial sector. But you have to realize this, that this is a very broad field. So when you say trading, depends what you trade, or when you do financials, are you an investor advisor, whatever. So it's very specialized. As a profession here, um, you tend to specialize in the field that you are, by chance or by qualities, performing well, put it this way. So, but the mentality, when you approach trading, what you're looking is to find a way basically to generate alpha. Alpha. What is this alpha? Alpha is making money. Basically, it's said in a nice term. But the way you you approach this business could be different, because professional trader is given a mission, is given a budget, is given certain tools, and has to perform according to the average. It doesn't have to be a special one, selected by some special qualities. It just has to know what he's doing, prove that this is in the future what he will be doing. Having experience in the field is going to be trading. But you will be surprised that I was hired by investment banks. I traded for oil companies. Bear in mind, when you say trader, a financial advisor is not necessarily a trader. A hedge fund manager maybe has other funds. So there's a difference. When you are a trader, you trade the capital and with a mission given to you. You are on the money side. You are not on the customer side. So the customer relationship, the marketing, all the stuff is not your job. Your job is to, given the mission, given the constraints, to make money. But you will be surprised to know that nobody ever asked, what is your performance in the past? Because that doesn't really matter. Because what you have to do is, the performance in the past could be linked to different missions, right? And by the way, if you look for a job in your career, probably happen the same. Nobody's going to tell, oh, no, I was very bad. That's why they fired me. And now I'm here hoping to make some money with you. So it's either a lie. So the past doesn't really matter. I'll give you an analogy. And this will be very briefly, but important to understand. If you are a top baseball player, basketball player, tennis player, and you are number one in a rank golf player, in the past, you rank number one. That doesn't mean that when you enter the course or whatever you play, you win. So you still have a chance to lose. So you move up in your experience by playing many matches and being good at it, but you have to keep training. You have to be evolving. So the fact that you did well in the past doesn't really mean that you're going to win. If not, there would be no match. Right? Say, oh, this is number one. Don't play because you're number 30. So you won. No, it's not like that. Trading has a lot of analogy like this. The past is the past. You did well. Maybe you were lucky. Maybe you had a lot of money. Maybe you find a niche in the business that is not there anymore. The important thing is what you learn out of this experience. Now, that's part number one. And that's all about, making some distinction. Second distinction is very important, this one. Most of the people that you are in contact with in the trading arena when you want to trade, they have an agenda. Like your broker wants you to trade, right? So if you notice, when they give you education, they give you education in a form that is, if you are bearish, do this and that and that, and then they explain the strategy, right? These are strategies that you use when you're bearish. Then these are strategies that you use when the market doesn't move. What are they doing? Why they tell you this? Because they remove um, responsibility from them. They say, oh, since you selected the wrong class of strategy, you're going to lose. It's not my fault. At the end of the day, they make money out of commissions, right? They don't really care whether the more you trade, the better it is for them. That's their goal. Their goal is not education. Now, there are other mentors that maybe were great in other careers, right? Or other fields, and they evolve. They evolve to be a trader, and then they teach you, yeah, you wanna be like me. You have to do this, this, and that. In my personal opinion, that doesn't work because, first of all, you don't know the details. Second, some of them are definitely not honest. Third point, maybe they have qualities that you don't have because, it's not necessarily knowing all the rules because there's a lot of psychology here involved. But to control your fears and, your misplaced greed, you need to have knowledge. So education give you that. It doesn't give you certainty. And, we just saw in a disclaimer there that the future return are not necessarily linked to past performance. Said that if I tell you how my P&L is, it could be misleading because first of all, I spent 12 hours sitting on a desk for the last 40 years. Things that I don't get. If you are here, means that you didn't spend that much time doing that because if not, you will not need me to tell you what to do, right? So if I give you my performance, it could give you this false hope that just by doing exactly what I say, you're going to perform like me. No, that doesn't happen. Like in any career, if somebody is good and somebody is not good. So it depends. There are other qualities that not necessarily, and I've mentioned few, right? If you are very stingy, put it this way, and you want to take a risk in a position because you don't want to spend commissions, maybe trading is not for you because commission are part of the business, or you don't want to get educated, or you think that because you follow exactly what other people say and you don't drive, you're not on a driving seat, going at 200 kilometers or a few hundred miles an hour, just copying other people's work that make you money, that also doesn't work. So having said that, I would say what I'm here to tell you, my mission is to give you translated in a way that you don't have to spend the same amount of time, what it could possibly work well for anybody following a specific kind of trades in a specific market that is options, that mostly is misunderstood. It's misunderstood, and I tell you why it's misunderstood. Because if you come from trading futures or stocks, you are in a symmetric risk, meaning can go up and can go down, less commissions, right? So all you can do is add more, remove risk, and move on. You can take this bet, put it this way, looking at fundamentals, the company that you are trading or following the charts and stuff like that. But that's completely different from what we do with options, because options are asymmetric, meaning it's a contract that is based on a Black-Scholes formula. By itself is not working. And that formula has it's a derivative. It's a differential equation. You don't have to know what is the differential equation. But the problem with this formula is that it's taken as a model, but doesn't really work by itself. So don't try to model the volatility and do this, because you're not a bank. You don't have a marketing skill. It doesn't really matter. You are a market taker. Even if you have the perfect formula, all you find to make the bet, it's what is in the vanilla market and what is in front of you. You may decide. So focus on the things that you can control. If you think there are many qualities about options, the most that attract people is leverage. It's 1-200 in general. So leverage alone, it's one of the quality, but it's not necessarily the best quality you want to use, right? Because in this contract, there are some asymmetries. So there is involved the capital. If you go short a put or a call, you require a lot of margin because your risk is basically very big, right, for the reward. Then there is another big problem that I see, and let me tell you this. Before I enter into this idea of teaching people, I've been following this for at least 15 years. And 4 years ago, I decided to take, to jump in a way, because it was mature enough. There is enough people that want to learn this and blah, blah, blah. So, but the idea is the opposite of what you may think, because, most of the people here think that by making this basic static bet without touching, it's a quality, but options are dynamic by nature. So you need to adjust it because, at the start, and this turns what a professional do. For a professional, the important part is when you get out at the end and remove risk from your position. That's your final position. The position may start in a form and be completely different when you get out. Important, when you get out, you minimize risk, right? You optimize statistically the chance to make money along the way, and that's what builds your P&L. So to put it this way, you're looking at the world upside down. You look at the end and, as a start. A professional trader, it doesn't look at the start as a start of a position. At the end is when you take the money and you spend it. So that's point number one. Point number two, there are things you can control and things you can't control. Namely, the market is going to go up, you can control it. Nobody can. There is no indicator, there is no stuff that can really control it. So that is not if you believe in that, maybe options are not for you. You have to understand what the options market and the option formula and this stuff give you as an advantage, as the embedded quality that they make them different because it's a contract. You have to think that there is only one fundamental thing that is over the years stable, and that is called the volatility risk premium. As an analogy, it's like the insurance, right? Some people, for their own reason, enter this market because they want to, minimize their risk. And they use the leverage of option to hedge their portfolio, do other stuff. Who are they? We don't care. You know the volume, you don't have the name attached to it. The important part is that you are on the other side. You are the insurance. So like any other insurance, to insure their risk that they give it to you, you ask a premium. And this volatility risk premium versus what is the historical premium as an advantage that for the SPX or the derivatives of SPX, it's about 4.5%. And there is in all indexes. Second point, why we trade indexes and not, stocks, individual stocks. There are many other qualities you will find in all the material, from my material or other material. There is a formula it's called European cash settlement. So you cannot be assigned this before, it cash settled so that they don't deliver to you, $1 million of Apple with 10 lots, right? So that you don't have the money and so that's nice because you control your risk. Having said that, let me move forward and say, what is this strategy about? This strategy is, it's not even a strategy. This is a method that give you, my mission was, I want to create something flexible, right? That maximize your the leverage of your capital without taking astronomical risk, right? Because some of you, put it this way, if you start going back to the start and the finish, if you start with an eye on Condor, if you want to make it, safe, put it this way, it doesn't move too much, right? Left and right. You may collect 10% of risk in 90%. Well, that is not a good bet for a professional because, it doesn't work that way. You have to find a compromise between this. The risk reward is, yeah, I am 99% to make $1, but if I am wrong, I lose 99. So that is not statistic. That's gambling, and it's not necessarily the best for an ion condor. So we want to end up in an ion condor after ion condor have this specific qualities. Even if you price them directly, if you stay right at the center, they do not mature much theta, so they force you to stay in a very long time. So in trading, the more you are risk on, the more things can happen, right? So if they move left or right from your center, there is another acceleration of your exposure that is called delta that measure how much you are exposed basically, and that's called gamma. That one will immediately put you in trouble because you'll have to decide what shall I do with this, right? To make, let's say, and also the are very. You need a lot of capital because if you make it wide, like 50 wide on SPX or 100 wides, you need to make it basically what you do. You sell a credit vertical call and a credit vertical puts, right? But to make some serious money, you are forced to either increase the size or increase the delta, in this case, not the delta, the difference between what you sell and what you buy. So in general, what I will do through this course, I will explain to you the single quality of a single stock. It's called dissecting. What you put inside the structure is your trade. It's not VIX, it's not the index itself. If you understand the quality of the single bricks that you use to build the wall, you are better off. Also because I think in these terms, and I'll move to the next one, you will end up with a free ion condor using another transition in a position, right? So at the end, you will have a risk-free condor or a cheaper condor. Oh, hold on. Are we already page number 4? Okay. So if you want to control risk, you have to go And the theta is notional. Theta is the amount of decay since you have sold the contract. This contract expired before in a time spread. The one is your back contract. So the decay of the one you sell decay faster than the one you hold long. You may say, all right, but then why I didn't go short without the other one? Why I don't just short, a call or a put? Because the margin will be astronomical. For SPX, it will be $93,000 every single lot, and the risk will be enormous. So there is really no point. So to do that, if you think about it, the entire class of the base of this combination is a vertical. With a vertical, you credit vertical, you will construct straddle. Basically, you are shortest straddle, longest straddle, shortest strangle, longest strangle. This one definition. For an iron condor, if they are not at the same short strike, in that case will be a butterfly, you will have an iron condor, right? If they are call and puts, and so forth. But you have to understand how you build this your combo, right? And that's only the first part. The second part is how easy it is to get out of this position. What is the order that takes me out? Because remember, in the things that you can control, right, paying commission, is to temporarily block your risk, pending news, Federal Reserve meeting, whatever that is, right? Hand of the word, announcement for some president around the planet, or whatever that is. So some people stay in looking at chart, looking at things, when in reality, for the size I've seen from retails, that'll cost you maximum $20 to get out and get in. So the market may move $50 against you, right? And then you lose 1,000. So it's a bet not to spend $20 in commission. You risk at the moment that the news will move your position around and you lose $1,000. That is not question of being a trader. That is not logical as a being street smart. So you have to have a position that easily can be removed from risk. So another point that I want to make is that most of the retail traders are being monitoring these people, add risk to adjust the position. Professional traders remove risk when they are losing. They use a structure that total remove risk and put risk on again. You heard about this term, risk on, risk off, right? Or minimize risk, decrease the position, and deploy capital in some other place of the price, right? Knowing what you're doing. But if you keep adding, it makes the problem. If you're right, yeah, it will recover. If it doesn't, there will be a moment that the margin call is such that you finish the money, and that's it. They'll wipe out your entire account. So third, at this point, and then I will move very fast. But it's very important to understand why my mission is to give you total flexibility to get in, get out, the better chance. Anywhere your level of knowledge is doesn't really matter, because this is a method, it's a technique in line for what the professional are doing. So I can control the amount of money that I want to put with the size. I can control the time when I want to place this bet, DTE. And I want to control also how easy it is to take it off in terms of commission and put it back on, right? So that gives you flexibility. Also, my mission was to design something that, okay, I miss the open because I work. All right. There will be a different trade and you have to do the close. I want to do a midday because I have a lunch off and I can log into my computer. Okay. Then there will be, once you understand this, you will basically model your trade according to your time, not the other way around. So your life cannot, unless you're a professional trader, cannot evolve or be based on the time of the market. So you want to have control when you put these things on. Obviously, every one of these trades is going to be different, right? Because if you miss the entire day, obviously your price is going to be higher for a time spread, or maybe you move to the next DTE or whatever. So that's my mission. My mission is to give you a method, and within this method, yes, they may ask you many times, you will have 3, 4, 5, 6 strategy to adapt. But that's the start. That's not the end. From there, according to your particular quality, your capital, whatever, you will adapt it to you. The mission for me is to you understand what you're doing and why, when you put something, it's time to take it off or put it back on. Another point about statistics. Statistic is not measuring the standard deviation of the underlying or the index in this case, or whatever that is, because we do not trade directly the underlying. When I say statistic method, is statistically speaking about the embedded quality of option themselves, because you are not trading directly the SPX or whatever you trade. The index is one important component of the pricing formula, but it's not the only one. And that's totally different from a future trader or a stock trader, because a stock trader trades just the price. Here we don't trade the price, the delta. We trade other qualities embedded and specific to the option market. Most, I mean, the people in books, they tell you that if you are an option trader, you are a volatility trader. That's also not right, because it's not the general volatility that you trade, you know, the VIX, next year volatility, the historical volatility. That doesn't really matter. You have to understand how volatility affects on the puts and call you put in your combo, and how to modify that one that you keep statistically on top and in control. That's the point. You don't trade the market. You trade your own position. And putting, you know, errors open, bad position or on top of bad position, it doesn't solve the problem. It make you more exposed, you know, to uncertainty in the market, and then you start reading stuff that, you know, because you have a direction. And second of all, it puts you in a situation that to unwind, to understand what's going on in your position is very difficult. Because when the position is simple, you know, more or less, you know, you have 4 things in this, you know how single puts and call move, and you understand if you put an in the money is something, out of the money is something else. But if I add 300 puts and call on top, who knows? You know, it's like Frankenstein. You don't know really what you have. It's very difficult to move from there. So let's say this is just an example. This is a base, I think it's 2, 3 lots. Double, I use TOS for modeling, right? And this is the start of a double calendar, real trade, right? You start with this. Also, if you notice, some of the numbers are right, some of the numbers are totally wrong, because the model doesn't solve that. So when you see delta, more or less is right within $50 on this index, right? Gamma also is more or less right, not necessarily. Theta is totally wrong. Vega is totally wrong. So now by just looking at this, it's not, it will be too simple. Everybody will stop, you know, doing what they're doing and just trade. It's not like that. It's not that simple, because in this formula, they give you these little numbers. This is the visual representation of some other forces that move within the formula, within the market, right? So when you look at this, you have to be able to translate and say, is this realistic? What happens if the market goes up? What happens if the market goes down? What happens 3 days from now? And so I am trying to give you the sort of translator to understand this, right? But in a very simple form, don't take me wrong. This specific method, it just, you're not going to learn this. You have an example of this. I'm going to go deeper into this, but you don't have to, you know, start studying, you know, the formula, graph, math, nothing like that. So let me move on. So basically what you do there, you take at a certain time, completely up to you when, obviously there will be differences. You start by having something that matures some real theta. What do I mean by real theta? Well, let me tell you this. I've seen around positions that invest $30,000, you know, in some structure. Then if you read even though the theta is wrong, they make $200 of theta. So let me ask you this. Do you think that is a good bet to use your capital? And normally to make some money, since you're risking 30 grand, right? You have to stay several days. So many things can happen. And then you will say, well, that is already, in my point of view, a bad position. Then second on that, you say, well, if things goes wrong, add more money into that with a different structure. So going back to my first point, you start in the wrong way because you start with your ambitions printed on paper, and the end result is not what you start with. Well, let's put this upside down. Let's start with something that matures some theta in a way that it's easy in case thing goes wrong. It's if you have at least two lots, it's easy to move it left and right to keep it stable, right, within a certain amount. But at the same time, for the capital, you deploy capital in an efficient way, and that matures some theta. So theta or decay. What does it mean? That you end up with this. And what is this? This is a real trade. This is a trade that lock in some profit, and eventually, you risk the difference between the blue line at the expiry and the other one. So you remove the time spread, and you now have an iron condor that has some different qualities, because this iron condor is paid and you cannot lose, right? And so if you can lose, okay, it sounds very good, but that's not the quality. It's not the fact that you can lose. In fact, you can lose, because now this one, for instance, was very wide, but was making 489, 490, but in reality, can go low. You see, if it doesn't end up here, yes, it's true, you can make 1,500. But if you end up to the blue at the expiry, that was the 25th of October, you lose that extra juice that you
Okay.
had. The important part of this is that you are totally free to reuse your capital. Your capital is not in margin anymore. So what does it mean? It means that you build another one here. I hope you see my cursor here.
Yeah, we see
And
it.
so that means that your money is back totally in cash with some profit. So if the market moves, I will teach you the technique is not to stay until the end because, oh yeah, I'm risky. No, that's wrong. That's another thing that is a lie, because you have some risk here. The risk is that instead of making for $500 on this side, you end up making less. The beauty of this is that your broker now doesn't need the margin because you cannot lose. And you cannot lose because you are in a, as I went back to the start, because you are in a cash settlement instrument, European style. That means that there is no margin here, because the worst thing can happen to you is that you make some money. So all the capital can be removed, and if you've done this with enough time, you can rebuild the same process here or there, right? So, and you say, oh yeah, but that what does it mean? Well, that means, first of all, if I have to analyze your P&L, what is your P&L if you want to put in graph? At the end, not at the start. Well, your P&L at the end is that on this one, since you risk nothing, you're making 1,500%, right? Because, let's say that you didn't lock anything. Let's say it was zero. Yeah, you zero risk, make 1,500. So that alone is different, right? This is a bet that I risk zero to make $1,500, right? And the rest can be deployed somewhere else. Also, you notice that once I do this, gamma is completely flat. Is completely flat. Delta also is completely flat. So you have no more risk left and right. So I will teach you that you can do this. This is called balance. If you unbalance because the market went left and right, you can adjust it. You can take a direction, right? If you have done more than one lot. So my mission here is to show you how to deploy this in practice, right? Doing this concept. Turn upside down your concept of using my money. Because if you put some structure on and stay 5 days and spend to make 5% of your profit, but you make 5% on 30 grand, right? And you stay in 1 week. Well, that's not good bet because many things can happen, especially the way you hedge it is wrong. But if you do this, you put one or two of this, basically all the rest can be put savings. You can buy Apple if you like it so much. You can do all other stuff, right? But your stress is removed. You are in control. You are in a driver's seat. You are not a passenger. The goal for a trader, you have to remove all the things that you can't control from your trade. Like market is going to go up, market is going to go down. If I do this, then I will do that. No, you have to be able to adapt. And this is very flexible. So if you can manage to do 2 cycles per week, that means that you can really score big numbers. Would you be 100% sure to be able to do that? I don't know, because if you have 5 minutes a day, the last 5 minutes, your performance is going to be different. Like anything else in life, the more you dedicate to something, the better you get. There's no other way around, right? So I will explain what are my suggestions. Are just suggestions, with examples. It's a method. Inside this method, that will change some of the mentality about your trading, right? I don't want you to learn why a time spread is like this, why a time spread is like that. I'm not going to go into that. I'll give you some example, and I will tell you this works very well. If it gets to this point, in this structure within the first few hours, do this, right? If it gets to the other structure, to the other direction, do that. That's it. But that works if you start with this, right? But then you will have to experiment a little bit, to say, well, for me, this doesn't really work because, at this time, I'm in Los Angeles. I cannot do the midday or whatever. I'm in Sydney. I can't trade the open or the close or whatever. Well, you'll find a way because this is very logical, right? So we just talked about that, capital recycling. Once this thing in transition is locked, there is no more risk. And your free margin, and you redeploy capital to expand your base. Your bet becomes more efficient, right? Also, you can temporarily take off your risk. As I said, pending news, you lock it, for a moment. You have, what is the difference? Let's say the structure I showed you before, it costs you about $2,800 of risk, the initial time spread. When I lock it, even with no gain, will cost me $200. So stay with me. If there is a pending news in the next 5 minutes, right? And I say, well, I'm not sure. This thing can go left, right, south, north. Okay, fine. You lock in a regular iron Condor. That means that before you were exposed to $2,800 for 2 lots, or probably were 2 lots there on that time spread. You lock it, no gain, no nothing. You are now in an iron Condor that you will manage by re-putting on the time spread later on. But your risk, the money that your broker will ask you, pass from 2,800 that you need to have to 180, 200. Risk is removed. That means when the threat pass, you can put it on again, right? So you start theta positive for real, not as a dream, right? You turn upside down that you don't catch a train. One is when you start and one is your exit. Most of the traders look at the exit without finding the entry door, right? So that's the point. It's totally flexible. You can do it in a way, shape and form and size that you like, because you can say, I remove 50% of this, right? And then you remove 50%. Okay. When you get better at this with practice, you'll find your sweet spot. You can increase your side. So I will give the full playbook, how you do this. Plus, we'll have tools. They're not necessarily 100%. You don't need them to do this, but it will help you in this decision. You will see the numbers in front of you, right? And those are, on top of this, I forgot to mention, I move everything to a different website from Aeromir in this case, dedicated website. The learning process is going to be constantly updated, and it's LMS, learning management system. So you will have quiz, you will have material, you want to go deeper. There are some other readings and other stuff. The formula is explained. Do I need to know all that to trade? No, absolutely not. If you have time, you can go through that, right? And it's good for you. But you can trade it without knowing all the stuff, basically. But if you are like some of you are a professional trader, maybe you want, you are used to that kind of stuff, or maybe you want to have a look. This thing is not based on my personal quality, my specific secret of, black box on the fact that I'm lucky. These are based on all the fundamentals of stocks or of options. So there's nothing really that magic about it. Now, let me talk, and then maybe Tom will talk. These two tools that we give you, the tools by themselves, they are sold around $150 to $200 to retail. I personally sell mine about 2 times that to professionals. Mine is based on IBKR, Interactive Brokers. Yeah, and this PDF that we will share, you'll find the two links. This use the most simple way to put trades into Interactive Brokers that I recommend, because they use extended the trading hours. Is the best broker in town. We pay you commission. I get no referrals from them because they don't give any referrals, and I'm against referrals. But that's the best broker in town. No surprise, it's the best, right? The first two video are the YouTube video. You will use what is called Basket Trader. Basket Trader, the order for Interactive Broker is very complex. What I built in the yellow one is a specific tool that in Excel will build the format that you can put standby into. You will put it into your Basket Trader. That plenty of videos from them. How is the spreadsheet? The spreadsheet looks like this, right? By the way, this you can use it for any trade. If you like butterfly, you like straddles, strangles, iron double, whatever. There are videos about this. There is a manual. So basically from this, let me go to the next. You put one trade, and they'll build the entire line of trades that you put standby. As you can see here, my intention was to build something that moves the price lower, meaning that I'm doing this. It's called iron double, but it's a double calendar. This double calendar, what it does is sell calls and puts certain dates. If you go move forward, this will preload. You can do it during the weekend. You can save it, and will transform. This is the format accepted by Basket Trader in Interactive Brokers. So you save it as a common separated file, Windows, and you upload it there, standby. So that's standby there. Then you can put it into classic. It's called classic TWS, right? With one click. Obviously, you can adjust further down the size, the price. But let's say if I have this can cover any price. If the market moves, I'll shoot this line here, the other line, or whatever I like, and I can just upload every single trade that I want to. You see, on top of here, you see the format of that order accepted by Basket Trader. It's pretty complex, you see. You see up there? So that's
Yep.
the spreadsheet will transform that one into this and preload into Interactive Brokers. So there is a guide, there is, funny cat. That's me, by the way. That's my portrait. Hope you like me. All right, now that we went to the fun. Now, Tom, if you like, I go back here. Now, the other one that is a fantastic spreadsheet. Maybe Tom, you want to take over, and this one. I put an old video but maybe Tom, you want to share your screen, and you want to just tell them
Yeah, I
what?
can share my screen.
Okay. How do I stop sharing here?
Oh, I'll
Share.
take. I
Okay.
got it.
Okay,
All right,
great.
so yeah, I started building this a while ago. It's called the Goat. Just kind of a funny take on the sports things, right? Greatest of all time. But it's basically a pretty flexible option manager for you. So you've got two different chains. You have a two different expirations, so it can handle time spreads. It was basically built around Dan Harvey's Iron Condor trading originally, and then it expanded to all kinds of different things. So you've got condors, verticals, high reward to risk ratio flies, some different calculators. So there's a lot of stuff in here. Um, but I'm going to modify it so the stuff that Thomas is doing will be part of the GOAT. So it's there's a lot of code and work behind this, but it's a pretty interesting spreadsheet. I've been doing more futures trading, so I have to kind of reacquaint myself with this, but it's there's a lot of work behind it. So
Yeah, if I can add, this is fantastic. It looks very complex there because, I tell you a little story that is funny. He started with version number one, ends up with version 107.
1.79. Yeah.
Yeah, 1.79. There is not just an 8, there were 179 modifications. So it start very simple with few lines. It's very complex, but we will model. Maybe you want to show templates briefly, because templates, we will include the one ready to use on your templates. Now they are not there in, and
Oh yeah, here.
yeah, we will not give you this before. We will give you at the proper time, because if not, you start asking question during the course. There will be a moment that I will introduce this, and that will be ready for implementing this. Basically, what this does, you want to show how you create an order, just an order that can be pasted directly into TOS, any order.
Yeah, sure.
If you take any of this, yeah, and then you do,
So you can say oh anyway, like create an opening order. Then it's in the clipboard now. So let me load Notepad.
say
Yeah, here it
sorry if
is.
I do the translation because you are very advanced. That's it. It will
Yeah,
create that
that's the
orders.
toss order. So you can literally go into toss and paste this in, and it'll just create the whole order for you.
Okay. In this case, since my orders to lock the position in variable form is so easy, you will have here that, okay, the original, let's say it's a double calendar, right? Uh, One click, and you will have to transform in an iron condor with your profit target, or, broken, unbroken, like market goes up X, do this. So it'll be just one click. That you will copy, right, and paste it into your toss, and there you go. That you attach already your order there. So I think that for the sophisticated people, it's very useful. For the others, initially can be a bit harsh, to if you're not used to spreadsheet and stuff like this. But like any other tools, you see a lot of numbers, but at the end of the day, if you trade that, you're going to use 4 buttons here, right? The rest is a plus. If you want to use it for other stuff, it's up to you. But it will have some interesting metrics as well. If you go into your chain, for instance, if
Hmm.
you go into your chain down there, you can select what you want to see there, right? You can see,
Yeah, the
uh,
expiration dates.
yeah, but also the delta, the theta. I think you had the volumes as well, if I remember well. You
Yeah, I mean you can see like gamma. You
Yeah,
can
you can
add
see other
vega to
metrics, and
it.
yeah, these are the
Yeah,
same you will see in TOS. But let's say, obviously, to use this, you have to have TOS, Thinkorswim, and the TOS has to be running, right? Because this is sourcing all the data from there, right?
right.
So that's it. This is the plus, as I said. This is not something that without this you won't be able to trade. Obviously, you will be able to trade if you like it. It's a complementary, right?
Yeah. It's a different kind of hammer. You don't have to use it, but it's a nice tool.
I like it personally, like I think that the more tool you have, and even if you don't use it, make you feel better. So
Yeah.
I bought several drills, but I probably use one. once in my life. So, but every time I buy a new one. So, all right.
All right.
So,
I can stop sharing
okay, I'll start sharing again for the final touch.
for the wrap up.
Right, wrap up. So that's it. It's going to be very flexible. And another thing, I'm not going to share details here of position because I've seen mentors, not professional traders, going on with some structure with different name for about 20 years. This is when you will see it's so simple that will go on another 35 years. So, and some of them are better marketing than me. So I'm not going to share this free presentation and let them, make money. But this is very simple. It doesn't apply any special concept or anything really that difficult. It's just a different way you're looking at things, risk in my opinion, in a more stable and conservative way, right? Where hope is not the leading force, when lies with yourself or from others is not dragging you into a problem, and it force you to jump from one guru to another guru. This will teach you how to manage your book in case you don't know what's going on. You have one click, and from risking 3 grand, you risk $180. And then when you know what's going on, you put it back on. But that order that you put, it's such an easy order that any broker will execute almost immediately. So that's it. And if you, in that kind of order, if you have to have a sleepage, it will cost you $5, $10. That I think also people, oh no, I don't want to pay, the mid. I want to stay at the bid. Yeah. While you wait, you lost 100 because you want to save five. So also that doesn't make sense to me, right? So anyway, the launch price is $510. That's the link there that will be active into this presentation. Once you have the presentation, you click and it'll take you to the payment. Important part, the most important part. When is the first class? There will be 3 or 4 classes, put it this way. If I can, one live. So we'll put a real live one when the market is open, right? To show you, all this. Instead of showing you the past, I'll show you the present. Hopefully the future will make some money, but so it's the 15th of November. The time it's 10 a.m. Eastern time on Saturday, and that is the time that suits the entire planet. There are few people from the moon and from Mars. They complain, but what the hell, we are we are humans based on Earth. So that is that's I think is the final. Well, I have a blog there on my website. It's clickable, where you find all the information. That's some more information that I couldn't share here, but we want to keep it, within 1 hour and give you. If you have any question here, I can answer a few questions. If you have um, any question in the chat, specific questions,
I don't see any.
and that's
Um,
a good sign.
so what I'll
I
do is I'll create like a short, an easier to use link and put it on the recording so everybody can get to it pretty easily.
Yeah, how to use the spreadsheet. The spreadsheet, Tom will share the spreadsheet. It's clickable. When I say clickable, you click here in your PDF, it will take you to where it's supposed to take you. Like you click here, you pay, right? That's good. Here,
Uh,
no, these are not clickable. But for instance, the videos, this one, these are for the first two will take you to the YouTube of Interactive Brokers, where they explain basket trader. The yellow one, it is the video of it's called BOT, B-O-T, the basket order trader, the one we built. And the other one, it's an old video, but I'll give you an idea of what Tom just presented to you. It's an entire video about the spreadsheet, the GOAT, right? You're clickable. That's it. Go back. I know this is horrible when you see it on the video, but I want to go to the end with a thank you.
yeah. Oh, and I guess Dan did post a few things in the Q&A. He said, "Is this suited for someone with limited options trading experience, or will it take a lot of time to learn?"
Absolutely, absolutely. Look, my goal was flexible and when you put it this way, when you switch on the light, right, a bulb light, do you know the physics? Why they make light? No, but still you use it, right? Well, think in these terms. This one, if you follow this instruction, you can still trade. And my suggestion is, after a while, if you want to get better, bit of curiosity, start digging a little bit deeper. But you can. I provide an entire guide if you don't know what an option is, or if you don't know what a future is, or whatever. In the course, there is some documents that will tell you. I never really traded anything in my life. Okay, you can start from there, but it's not necessarily the best start, but absolutely, you can trade this without any previous experience. At the same time, if you have been trading for 30 years, something else, right? This will be very interesting for you to learn a new trick, right? This method. Obviously, like anything else in life, the guy A, the one that never traded an option, will have the same performance, or the guy B that's been trading other stuff for 20 years. Probably and probably not. I don't know. Maybe luck. The beginner luck sometimes is stronger than the other guy. It doesn't. That I don't know. I can't promise anything. But there is absolutely no knowledge, pre-knowledge. Actually, I prefer to have students. They are not. They do not have a set of ideas. It's easier to start from scratch, in my opinion. The class will be about 2.5, 3 hours long, 2.5, I would say. And the class, one important point, I will change a bit the format. I will go live, and I'll go live as a workshop, but then we'll transform, when the workshop is finished, I will call it a course. So if there is any editing needed to make it more suitable, right? Because we miss something or you add I will edit the stuff. That's a more challenging work for me, but it's an honest way, because in a workshop I may go in a way that we speak a lot about something and then we forget something else. Okay. So the fact that you participated will give you a chance to interact with that one. It's live. But then if you watch that, 1 month later, you say, well, who cares what they said? This is not what I'm interested. So I'll complete to follow the program with some material if needed. So even if you participated live to the workshop, it remains something a little bit different. Hopefully the perfect workshop will need any editing. That is good for me. It's less work. But if it does, I will move it. I will transform it. I will make it better, right? Because if I didn't explain something well, I will watch it again and I will correct that.
Oh, and Dan also asked, how much time will it take to analyze, monitor, and execute trades? For instance, is this something you can check once a day and relatively quickly know what to do?
You put an order in with your target, meaning you put the initial order when you like. It will be, I will tell you, if you put it at this time, this kind, this wide, this thing, as a start is something. You put later, this is something else. Then once you put it in, you put already the closing order if you have a target. You also preload with your broker. These orders will not get filled at your disadvantage, will get filled only at your advantage. Let's say that if I have a target, right? What is the difference between this? It's a good question, this one. Let's say if I put a mechanical eye on Condor where I have a stop at $2, but then the market crash 100 points and I get filled at minus $100 because rejected, bounce from brokers, happened 2 weeks ago. So do you realize that some people put a position where they were supposed to cash a little bit in by selling mechanical iron condors, right? But this seems the broker confirmed that they were out for $2, slippage $4, and then they receive an email from the broker say, sorry, this was bounce, means now you are exposed to $106 per lot loss. No, with these orders, I will not guide anybody to do that. That is unprofessional, it's crazy, and it should be banned for people going out and telling, and the broker itself, when you see an order like this, to tell you before that this is an order that I will not perform if the market dive. So I will not put you into trouble because fortunately I make money out of trading by myself. I don't want to have people on my, on the list of the people that are my enemies. All right. So the second point is that the order you put in, you can modify it, but if you leave it there and say, I want this Condor to make me, I want a Condor that I spend $15. You leave the order work, and that's it. Obviously, you know, you had to be linked in a way to the computer with your phone and say, well, look, uh, you'll see that order in some platform, mobile platform. If the market die 500 points, you better know you can leave for a desert island and leave this. The point is, before you leave at the airport, lock it into, as I just said, you had a risk to 2 grand. Lock it at the maximum you can lose is under an 80. When you regain access to some information, you put it back on. I mean, this is logic. It's not question of trading, right? The leverage, let's say, has to be mastered. You make money out of leverage, but taking bets on direction with leverage, with bad execution, the bad orders, it's a bad idea.
All right, that's all
Uh,
the questions I see. Oh wait,
how often are
uh,
trades? It's up to
yeah.
you. I will tell you. I'll teach as many as I can. In this case, I want. You see, the difference with this format is this: all the one that requires time for you to read, it's on the website as a course, right, if you want to. I will put in more and more example and telling you the practicality of this, how you put the orders, how you execute the orders, when to put them with the example, with the templates. Then you pick. There is one that say, if you want to do this, you have to stay all morning in contact with the market. But if you put one that is 7 days and 15 days, you can put it on and nothing will happen. You go fishing, right? One is that you fish on something active, like a blue marlin. You have to be another one is the net. You put the net, there is no risk. The thing will mature. You don't have to look. You can look every 2 days. The difference is this, right? That they have a different profile, right? Because that's follow the general rules, right? You want theta to decay or the decay to happen more faster. Well, you have to have more control because your gamma is more. So you have to be available when the market knocks more often. If you are busy, you want to put it back, right, in the curve, so less active, you can also disconnect and go, on your daily life for a couple of days, nothing will happen. But at the same time, nothing will happen. But you have a stop order in that take you out of trouble, or you have a profit target in that take you into a profit. And if that is not enough, with more time, you don't build only one. If the market moves, you build another one. The odds basically are in your favor. How you adapted is up to you. How many you want to put, how much time you have, it's entirely up to you. When you will see the class, I will tell you, if you have this desire to be very active, you can do one on a 0 DT every few hours, right? For an entire week and basically remove risk 15 times, right? But that obviously cannot be done, the same kind of trade, by you putting these trades without following the trades, right? If you do 10 days forward, I think I share, it's from 1 to 15 days, long, the short leg. Longer than that, you just put in stuff that doesn't move, right? So there's really no, on SPX, there is really no point to something, oh, I have 3 months, and 4 months. Okay, you pay, this is a very expensive, don't move. So it's a bad way to put money in because nothing will happen until you reach the first 15, 20 days from the expiry. I will teach you all that, don't worry. But as I said, I wanted to design something that is completely up to you. It's a method with examples, trades, good performance. You can model the way you like it. That, let's say this is not something that I put on Friday. You can put it any day, right? Any day. Doesn't mean you. It's not something to say, oh, put it only at open or at close. Whenever you put it. I will tell you though, if you put it at open, versus the close, the day theta is gone. All right. So There will be a point that probably it's better you move the entire trade in terms of the first initial trade, the time spread, to the next day, because there's no point. You go overnight risk and nothing happened, right? So I will tell you all this, but without getting in details why you put them, why you don't put them on, or stuff like that. I will tell you when you put it, and if things goes wrong, there are three things you can do. That's it, right? That's it. The more you have, another concept that is wrong with I would say most of retail, the smaller the position is, the more difficult it is to adjust it. Because if I start with 10, right, and let's say the market move left, move right, I make it unbalanced left, unbalanced right, I end up with an average that is better or trying to optimize two lots that I have only one. I can put it this way. Uh, I have only one chance to be right. But if I have put 10 lots, let's say, remember, I can put 10 lots if your account is bigger, but every time I remove one, I make it into Condor, I free money to put this risk somewhere else if the market moved. That is the key, right? It's not that the market has to adjust where I put the initial position. It's me adjusting the positions with margin calls execution where the market moves. I say we turn the table. It's not you hoping that the market ends where you start. It's you following the market around with a strategy, put you in the best position to make money. I hope this answered the question, but it's completely different the mentality because you say, oh, I'll put on and I'll leave it. That's not trading, right?
All right. I don't see any more questions.
Last chance for a question. If you have the right question and we like it, you win a trip to Bahamas and a bottle of Pepsi. No,
Oh, no Pepsi, Coke. Remember that
no Pepsi. It's a Pepsi. They don't like
Saturday
Pepsi here.
that Saturday Night Live skit.
Yeah, exactly.
Oh, no Coke, Pepsi. Oh,
Ah,
here's one more.
given adjustment work for diagonals, can it be used for colors? Yeah, but this is not when I will have the color. You can look, the adjustments here are very specific because, somebody just asked me, uh, you see, somebody just asked, would you give me instruction for this method to make it work? Yeah, but if we start going, can this work for dispersion trades? Let me tell you this. This can also build a butterfly, broken, unbroken. It's the concept that is different. So yeah, you can adjust whatever you like. Um, you know, at the end of the day, I will explain to you that when you attach a name, like color, butterfly, this and that, all you have it's a combination of puts and calls. Okay, so with those building blocks, you can build whatever you like. There is a problem though. If the building, professionals always talk about execution. Is this complex option I want to put in an order efficient, easy to put in, easy to get out, accepted by brokers? What is where is the risk? For instance, professional don't do broken wing butterfly because they already have a positive delta. So shifting the risk on the lower side, it puts him nobody wants to have the risk on it. If you had to protect an investment and you do a broken wing where the risk is on the left side of your shape there, the market die 5%, you lose on both your investment and your broken wing butterfly. So that is not the variable preferred by investors or by hedge funds or other stuff that normally are long. You may not know, but if you have a pension fund, if you are an investor, you're already long delta, right? So any other position you can adapt it. I'm not against the beauty of option is this, that you start with zero delta if you're a trader, positive delta, right? And whatever delta you choose because you have some other underline, some other structure. This specific course, it's a method with some fundamental changes in mentality, risk on, risk off, easy to execute, turning your money faster than ever in terms of, so if you have a small capital, with this, you can really, make a living, because once you lock into the stuff, it's either 10% of the initial one and you move risk around if you are active, or you just lock in a trade that has no loss and you build one or two. So it's a mentality shift from, hoping to be right to following the fundamentals, specific quality of option to make it right. Okay. Most of the people do not use the full colors that that the options gives you, right? Flexibility is enormous, but you need to understand uh, how to maneuver this. Like, it's like asking Michelangelo, I give you a block of marble, right? Well, okay, I give you the marble, then you can model the way you like it. But here, the people give you already the statue, right? Without telling you how to get into the marble. So I think the word is upside down. I give you the ingredients, the material, and some example how to execute and learn from there. But that's a start, right? You can model the way you like it. For how long we'll have access to the course? 200 days. And I do that because my material, for me at least, is precious. And after a while, it's all encrypted. You cannot share or whatever. But you never know. I don't want these things to be, since I will keep adding stuff, right? Obviously, at the end of the 200 days, I will have a formula like, you want to extend it out of 6 months, spend 100 or 50 bucks, but that is not spent to have the same material. There will be other material. So if I don't add anything, I will extend it, free of charge. But if I add other material, I want to be paid for the material that I add. This is not bullshit, guys. It's time, it's work, right? If the people think that there is no value in that, that will give you access for life. But since I will keep posting, there will be a Discord channel. There will be chats not hosted. By the way, not all goes away. It goes away for you if you don't pay. I just said, if you don't pay the extra 50 bucks, 100 bucks, it goes away for you. You have to resubscribe because there will be new material. But let me tell you this, I forgot about this. This is important. As an experiment, since my view is not necessarily retail views, right? We said that at the start. I took a couple of guys and explained to them within, I think, 2 sessions on Zoom, just for no more than 25 minutes. The same guy, and I said, do simulation, tell me questions and things to see how to explain these things. Well, that guy, I don't want to share here, but probably I share on my blog. That guy that probably is here made the first trade he took. He made like 1,650. The other one in total he made like 4 grand, right? After 25 minutes, without my intervention, without me knowing, actually me against putting real trades. So that for me, though, give me confidence that the guy is, I won't say advanced, but he traded options before. Has been in following my alerts, my stuff, but this is nothing to do with that, because the mechanics of this not necessarily need the previous education he received. It's a smart guy, obviously, maybe a lucky guy, but giving encouragement is that without me, he just post something and and show me results, in no time. Yeah, but don't, I mean, these 200 days, it's sort of safety measure for me not to be copied. Also an incentive for me to put more material, because if I charge you more, it means that material has been upgraded, right? To do, the people inside this will have, after a while, I may do another presentation explaining to you other tactics in detail on the same tenor, I mean, the same material, right? So give me a chance to make it better. But anything in life, if the course you are protected in a way, because if I had nothing, I may say, okay, I'll understand it. Cares. But if I charge you, you have my word, there is something in it that has value. No, I won't charge you, right?
Fair enough. All right. I think we've been going over an hour. Probably a good time to wrap it up. Any last
Yeah.
words before we say goodbye?
Well, no, I mean, I think I covered. If you have any question, put it this way, do not, Tom, may I call you after class? Okay. We
Oh,
all
there's two
Tom here.
Toms here.
Which Tom? All right, I'm
Probably
Tom.
me.
Yeah, probably it's you. Mhm.
Oh, yeah, yeah. Okay. Yeah, sure.
Oh, okay. Look, I would say this as a final thing. I think it's going to be very good because I'm the one that charge you and but I'm honestly thinking that this is totally different from what you see. If you find what is out there for you to progress trading options, this is not similar to what you have seen before, right? It's practical, it's flexible, and I'll give you all the information needed to make real money. Obviously, for educational purposes only, blah, blah, blah. At the end of the day, it's up to you. Do not DM me directly. I will post everything in the question and answer. If you have, send the support, not to my email, send it to support to my website or send it to, there's a blog there, participate the blog, and I will answer so that your question is answered to everybody. It can be a general question. If it's specific about you, it's different. But if you have a general question, I don't want to answer the same question to 50 people this way. That's it. It's all for me. Have a good one, and I hope you will join. By the
And
way,
there's,
it's Saturday, yeah. So don't get.
yeah, somebody asked for your email. It's just thomas@airmere.com. So if they have questions about it, they can just contact you directly.
Okay, I just said don't contact me directly.
Oh, okay.
All right, never mind. You can contact me directly. All right.
All
Yeah,
right.
forza
Sorry about
Ascoli.
that.
All right. It's good.
All
Guys,
right.
have a
All
good
right.
one.
Thanks,
Bye-bye.
everyone. Bye.
Bye. Thanks.